The exchange-traded fund (ETF) industry is experiencing an unprecedented surge in the United States in 2023. The rise in ETF launches is fueled by a variety of factors, including the impact of rising interest rates and increasing market volatility. In this comprehensive analysis, we'll not only explore the trends and drivers behind the ETF launch boom but also provide market commentary and expert insights to help investors navigate this dynamic landscape. ETF launch surge in 2023. The year 2023 is shaping up to be a record-breaking year for ETF launches in the United States. According to Morningstar Direct, as of the final week of October, 391 new ETFs had already begun trading. This number is significantly higher than the 311 that had debuted by the same time in 2021, which itself was a year of record-breaking ETF launches with 475 new products introduced. The surge in ETF launches isn't just a numerical record, it's indicative of the industry's adaptability and innovation in response to changing investor needs. To gain a deeper understanding of this phenomenon, let's delve into the factors that are driving this surge. Market commentary. The role of rising interest rates and market volatility. The impact of rising interest rates. One of the primary drivers behind the surge in ETF launches is the trajectory of interest rates. The U.S. Federal Reserve had raised interest rates to multi-year highs before taking a pause in the previous month. This shift, combined with geopolitical shocks and concerns about rates remaining elevated for an extended period, has created market turbulence. The impact on ETF launches. In response to these conditions, asset managers have accelerated the launch of new ETF products. The pace of weekly introductions has doubled or even tripled the long-term average of 8 to 9 new ETFs. This heightened activity reflects the urgency among asset managers to provide investors with strategies that can thrive in this evolving interest rate environment. Market commentary, actively managed ETFs and investor preferences. A record month for ETF debuts. In September 2023, ETF debuts achieved a historic milestone, with 69 new funds introduced in a single month. This significant surge in ETF launches can be attributed to various factors, including investors seeking alternative strategies in a changing market environment. While October is still ongoing, the number of new ETFs introduced this month has already reached 47, according to Morningstar Direct data. Analysts predict that the final tally for October will likely surpass this figure, reinforcing the trend of heightened ETF launches. Actively managed ETFs, a driving force. A noteworthy aspect of the surge in ETF launches in 2023 is the prominent role of actively managed ETFs. Of the 375 ETF launches recorded this year, nearly 75% are actively managed funds. This surge in actively managed ETFs is notable, as it highlights the growing interest in strategies that were previously more commonly associated with traditional mutual funds. Market commentary, the appeal of actively managed ETFs. Actively managed ETFs are appealing to investors for several reasons. They offer strategies that were typically available only through mutual funds, with the added advantages of greater liquidity and often significantly lower fees. This combination of active management and the structural benefits of ETFs has proven attractive to a broad spectrum of investors. Active ETFs, while constituting only a small portion of the total assets in the ETF market, have a significant impact on inflows. According to Morningstar data, active ETFs represent just 6% of the total net assets in the ETF market. However, these funds received nearly a third of the net inflows in September 2023, underscoring their growing popularity. Aniket Ulal, head of ETF data and analytics at CFRA, links the surge in active ETFs to the growing interest in defined outcome ETFs. These products utilize options to mitigate downside risk in exchange for capping potential upside returns. These strategies have garnered attention from investors who are nervous about volatile and uncertain markets. Market commentary: the role of defined outcome ETFs. Defined outcome ETFs have gained traction among investors looking for strategies that offer downside protection while still allowing participation in market gains up to a certain limit. These ETFs have become an essential tool for risk management, particularly in uncertain economic and market conditions. The assets in active ETFs had reached $22 billion as of January 2023, marking significant growth from about $183 million just 4 years earlier, according to Morningstar data. In 2023, assets in defined outcome ETFs have continued to climb, increasing by an additional $2.64 billion, accompanied by 48 new launches. These ETFs are appealing to investors due to their customization capabilities. They can be easily adjusted to meet the specific risk and return preferences of investors. Market commentary: fixed income ETFs in a changing environment. A dynamic fixed income ETF landscape. Despite the bond market being on track for its third consecutive year of losses, asset managers are actively launching new fixed income ETFs. Investors have responded positively to these offerings, particularly in the realm of actively managed fixed income ETFs. Market commentary: the role of active management in fixed income. Active management in the fixed income space provides a distinct advantage, as it enables portfolio managers to react nimbly to changing market conditions. In a period when interest rates are rising, active managers have the flexibility to capture upward momentum on interest rates or navigate declining rates more effectively. Market commentary: the value of active management. Active fixed income ETFs offer investors the opportunity to access the expertise of professional fund managers, who can make timely adjustments to the portfolio to optimize returns while managing risk. This dynamic approach to fixed income investing can be a valuable addition to an investor's portfolio, especially in a market environment characterized by changing interest rates. In recent months, asset managers have introduced a host of new fixed income ETFs that provide investors with diverse strategies for navigating the evolving fixed income landscape. These ETFs often offer investors ETF versions of strategies that have previously been available only through traditional mutual funds, expanding access to a broader investor base. As of 2023, 82 new bond ETFs have made their debut, according to Morningstar Direct data. These introductions reflect a robust interest in fixed income ETFs and the recognition of their potential to deliver value in the current market conditions. Conclusion: the surge in ETF launches in 2023 is a testament to the adaptability and innovation of the ETF industry. It also reflects the industry's responsiveness to the changing investment landscape and the evolving needs of investors. In a market characterized by rising interest rates and increased volatility, asset managers are introducing a wide range of new ETF products to cater to these changing dynamics. Investors now have access to an array of opportunities to diversify their portfolios, manage risk, and access a broader spectrum of strategies through these newly launched ETFs. The ETF landscape in 2023 exemplifies how the industry is evolving to meet the demands of an ever-changing financial world, ultimately providing investors with more tools and choices to achieve their investment goals. The surge in ETF launches is more than just a numerical record. it's a reflection of the resilience and adaptability of the ETF industry, which continues to find innovative ways to cater to the needs of investors in an ever-changing financial landscape.